that we take is high probability trade. The trade that we take is high probability trade. And you must know that there is no 100% assurance on any trades. What an analyst, one analyst is
I
seeing
didn't even know.
might be different from what the other analyst is seeing when it comes to forex trading, because there
I
is no.
didn't even.
Okay, it's muted now. I don't want to do it for you. So there's no 100% guarantee. So what we try to do to engage any forex trade is we do high probability, a trade that would deliver like 70% over, that we are sure that is going to do that. But at the same time, we must have at the back of our mind that what if it does not? What if it does not? What do we do? The 3% or the 10% that is not going to go our way, it's also there. And how do we engage it? So we've got to control our emotion and be disciplined. If any trade is going against us, we must know on time that this trade is not going to do what we expect the trade to do. So we should get out of the trade to minimize our loss. So the mentality from now on is, let's control and reduce the loss to the barest minimum. And two, if a trade is going our way, let's make the best and the most of a trade that is going our way. I'm going to say that again. A trade that we see that is not going our way, we must be able to identify as early as possible that this trade is not going our way. And we should just leave, with the barest minimum. That is the right kind of mentality that we must have to trading forex. We cannot say we want to make the money at all cost. Even if everything that we have said about that trade, from our analysis, from whatever, if it looks good to be in the trade, once we enter the trade, we must be able to pick the pointers as quickly as possible to reduce the loss. So we call it damage control. Now, what is the essence of losing $10 each on, like, if you have, for instance, if you have like, you want to do 10 trades, and the money you have in your account, assuming is $200, and you are losing $10 each. So what's the point of losing $10 each in 10 places? By that time, your account is already half gone. So what we want to do is, how do we minimize the loss? That even on the 10 trades, can we reduce that to $20 instead of $100? And when we have a trade, can we make most of this trade? So there's something like, okay, I want to, okay, the trader has had one over me. I want to also beson and do my own. It's not like that. It's not like that. The right mentality is for us to pick on time that this trade is going haywire. Some trades might even still go our way, but you can't lose anything by, if the pointers you are picking at first says this thing is not good. If the pointers you are picking is like, the setup is not good. Initially you thought that the setup is good, but this setup is not good, just leave the market. Once we have a better setup, we enter. So, and each time we engage a trade is with that kind of mentality that we engage that trade. That if this trade is not going to go our way, we will know on time and limit our loss and wait patiently until the trade is ready. And we have to pick the pointers along the line if it's going our way. So we reduce our loss we fold our hands and wait, and we make the most of any trade that is going our way. That's the best approach. We make the best or the most of a trade that is going our way, and the one that is not going our way, we exit it as early as possible. I will be teaching all these things. Like I opened up with, I said, you don't have to allow your emotion. You have to be constructive. You don't trade with emotions. You don't say at all costs you want to make money. If it's not going your way, then it's not going your way. What I'm going to teach you, in about 70 to 80% of cases, it works. In about 70 to 80% of cases, it works. And let's just do that and just hold on to that practice. 70 to 80% of cases, if it works, it's good for us. So if it's not going to work, then we leave the trade. That is what I'll be teaching us. It's better for all of us to know it. Once we all know it, then it's good for us. Now, I have a chart in front of me, and that chart is AUD USD. How do I engage this chart? Perhaps I'm doing this trade for the first time. Like I told us, the best thing is to first go on a week. Can do. Because there is no way I won't pick this thing all over. You go on a week can do to see what the trend you have been in the last 2 or 3 years. Last 2 or 3 years is what we need. This is a week can do. Then we pick our EMA 200 to give us, okay, what trend are we in? If it's downtrend or uptrend. So as we can see, this is EMA. The EMA had shown us clearly that this trade is in a downtrend. Now, I came here to pick my EMA. You can see my cursor 200, and this is the black EMA. And I told us that once we have this, we have confirmed that this thing is selling. So there is more of selling than you have buying. So that is the natural trend of this particular currency, AUD card. Now, after you have done this, the next thing to do is to draw your resistance and support. If you don't know how to draw resistance and support, go and watch the videos. I've shared this video, and if anybody has it, I think Bola in the UK, you have enough videos that will teach you on how to draw support and resistance, the key level of support and resistance. So you draw your support and resistance on the time frame, the weekly time frame. Like for instance, this height that the price cannot go beyond is a resistance, like a ceiling, and here the price cannot break below it is a support. Then here support, and you have them all around that you can just draw your horizontal line, for when the price cannot break above or when it cannot penetrate below. Those are supports and resistance. And after you have done that, the next thing to do is, let's zoom back to what we have confirmed that this thing is actually on a downtrend. So more of selling than buying. Now, currently this is what we have. Currently, this is what we have, and this is what has been happening. So, now, around December, this thing sold to this point, and they pushed the price back upwards and to this level. So, they first push it to this area, and after some time, it was more or less a consolidation that the price is not able to go beyond this level. You can see this 3 candle here on a weekly basis. So watch very well. Watch this thing very well on a weekly basis. Now, they force the price, the blue, which is, or you can call it green against red, the green against red, their activity, had been here. So they were the one that forced the price up here. When you see weak, it means that the price rushed there quickly and it was forced backward to concentrate the whatever happens, to put it within this range. So, and this one. So the bulls were there until they had equal strength here. And you can see this small sign is an equal strength before they showed up. Now, showing up here, you can see the height of this wick here and this wick here. That means they sold and they got to this point, and after initial quick move, they're just doing a little ascent from here up to this point. Then the price went a bit back in here, and they broke loose again to get to this point. So now, if you see this candle, 1, 2, 3 candle, if you see those candles, 1, 2, and 3 candles, you see my horizontal line, they are almost at the same level, which means that for like 3 weeks, price could not break beyond that level. Price could not break beyond that level until the last 2 weeks here that you had a little charge up, and this one, which is what you are currently seeing. At this point, of struggling, one will be thinking the bulls are coming to the end of their journey, because there is no fast movement again against the bears. So they are almost coming to the end of their journey. That is how we read this candle formation. And you begin to see little body, At times, one will think that, after a little body, what you will see next is like the candle will form will be like this, or that the bears are going to show up to force the price down. But what you saw here is unusual, and we're still going to come back to it. All of a sudden, the body of the candle now became bigger, and it was going up. Even going up is not up at this level. You can see the levels here. The level here, it's really at that level now. The price is really at this level. And we shouldn't expect the price to get above where the bears pushed it back. If the trend still is going to hold, we really wouldn't expect that, because the longer arm should be selling and the shorter arm should be pushing the price backwards, upwards. So that is what we can. Now we are going to enlarge this area, and we're going to understand that what has been happening between 1, 2, 3, 4, even 5 and 6 is pretty much consolidation. The price had been forced within a zone created at this level and at the lower level. And if you want to do it, you can even bring it down here. So between here and here, until you have this more break, up. So we must know that we have been having a consolidation. So the consolidation is to now study the pattern of the consolidation, to now know how do we engage this consolidation, how do we trade consolidation. It is very, very important, because you don't know when the price is going to switch and begin to come back downwards. So the pattern is very important. And if you're going to draw, a trend line is the line that you draw from the lower point here, and it goes a bit vertically. It's not vertical now, it's diagonally up to touch the base of all these. means that there is a gradual ascent. If you draw a vertical line across, there is a gradual ascent. But this is too big for us because it's a weekly candle. We need fine details. So we are going to go to daily candle to see better for ourselves what has been happening. I'm still going to bring back my line because I have lines drawn. I'm going to bring back. So we are going to change this also to, because we have established the trend that is downtrend. So we are going to change this back to our EMA 50. The EMA 50 is the first moving average that tells us if trend is changing or is not changing. So you can see that the price is now, is this EMA 50 on daily basis, the price actually is above it. So, but it doesn't mean that the trend on the larger picture has changed, but temporarily is an uptrend that we have here that we can see on a daily basis. And you can see a longer arm buying, a shorter arm selling, and it was as if they were going to force it down here, and they went up again, and they had small show here, and they forced. This is daily candle. This is daily candle. So there is not yet any reversal, and where you pick reversal to the normal trend early enough for anybody to trade is on 4-hour candle. So what we want to do is, in trading any pairs, we want to enter early. We want to enter early with them and right with them. So when you enter early and they get to the middle and they are behaving stupidly, you have leverage. You have enough time to study them because you entered early. Now, so this is daily candle, and the last day is still not reflected here. This should be Thursday. Whatever you see here is Thursday. By the time we have midnight of Sunday around 12 or 1 o'clock, the other candle will form here to tell us what is happening in the new day. So that candle is not yet here. But we have 4 hours, the last about 4 hour, we should see like at least 4 or 5 4-hour candle in this area that will give us an hint of what is going to happen next. So I hope you are following me so far. I don't want to lose all of you. So the next thing we're going to do, we're going to now go to 4 hour. We break it down to 4 hour. Let's break it down to 4 hour. We're going to understand something. Now this is 4 hour. And let me try to zoom out to where we have all those big move. Now, this is the big move. The big move down that you saw, those big candles, this is the big move down. And the small move that went up was this. And another movement up. And at this region, pretty much at this level, from here down to this level, what we have is consolidation. No big movement. So you can still give this that, okay, the movement went to this point. And after this point, price was more or less in the middle. And now what you can see here is also not big movement. So the price actually is coming to its end. So if I were you, I will be looking at this particular candle here. I'll be looking at this particular candle. You see, we have to do technical analysis. We have to check everything, tick all the boxes. Even after ticking all the boxes and it looks good, 90% good, we must know that 10% probability of the trade not going away is still there. So you must know that. So I will be interested in looking at this level of the price, which is where the price is at the moment. The price is at the moment that you can see at this level of the price. So I ordinarily will not expect price to go beyond it, but you can never say never in forex. I shouldn't expect price to move beyond this by 20 pips. But we cannot say never in forex. Ordinarily, I shouldn't. And when you see that price is around the EMA 50, wrapping around it, it is nothing but consolidation that is happening. So anything can happen. Price can begin to nosedive. And if that is going to happen, you expect the price to begin to nosedive, and nosedive really good. At least first to this area, then probably to this area. The way the price ascend most of the time might just be the way the price is going to descend, testing every support and resistance down the way it went up. So what most traders will do is not to enter a trade at one level of resistance which the price cannot break, and you now see, oh, 1, 2, 3, 4 levels of support that you expect the price to break in going down, and you go to the 10th support. That is greed. Whatever you are drawing does not make any sense. Price will do it eventually, but not immediately. It's going to take a long time, and all we can do, anything can change. There are things we don't have control over. Economic news, fundamentals can change, even though your analysis is correct and super. Everything is super about your analysis. But because of what we don't have control over, political war between China and US, any news can just affect the price and make it behave abnormal. So the abnormality comes in once in a while. So when it comes in, it takes your money. So I want us to concentrate on how we deploy tactics to trade around here. Now, see, there has been a gradual ascent from here. So the slope is actually going up. The slope is going up. And it's going to come down one day. And we might just be at that level, because this is where we think the price will not get to. We didn't even expect the price to get to this. We thought the price was going to bow from here. And you're going to see later, by the time I enlarge this thing, the price got to this point, pulled downward back, made this high, pulled down, and pretty much consolidation is a whole lot of time around here. A whole lot of time around here before this ascent. The price came back and it was more or less moving around this, and before this happens in the last 2 weeks. This movement in the last 2 weeks was, very terrible movement that probably nobody expected it was going to happen. Now, before I go forward, I'm going to bring back, I'm going to show us a drawing. If you are following me, I'm going to show us a drawing of what we call consolidation and the type of consolidation that we can see. Consolidation, when something is trending, like I told you, the trending market, it's going zigzag, but the trajectory is upward, and that is uptrend. When its price is moving down, you can say it's downtrend. But when the price moves like that, it will get to a point that they want to do a kind of a rest in between. And you can easily draw a line below the lowest point of the price and the highest point of the price, and whatever you have in between is what we call consolidation. The diagram 1 is pretty much easy consolidation that anybody can have. When the price enters here and gets to the point here, bounce back, get to the support, bounced off from the resistance, hit back, and all that. This is pretty much for anybody to trade. All you need to do is to be at this level, expecting the price to get here, enter to ride up with it, and you are somebody is also locking here, and wait for the price to get here, enter to go down. This, we don't see this commonly, but it does occur. So for such a consolidation, you enjoy to trade it. And how to exit this kind of consolidation is, of course, you try to be around this line, this zone, not at the upper zone, waiting for whatever is going to happen. And also around here also, you are waiting around here to watch for what the price is going to do. So if the price is going to break the support, you wait for the price to break the support and retest the support and see if it's going to continue before you now join a downtrend. Or that you wait, if it breaks up, you are going to wait for it to retest, and you do all the mapping that you can do to pick the price early that, oh, this thing wants to go up. So this is one form of consolidation that you can have. The second form of consolidation that you can have also is this diagram, the second diagram. Price moves up and down, zigzag, and before you know it, it's like it nosedive again. Then it goes up again, and you think it's going to touch here. It's like it's nosedive. It gets to the middle. If you see the level of the price here and the level of the price here is almost at par, so not much movement. Price was just wavering in the middle, and you can't second guess this kind of a movement of consolidation. And the price gets here, you are thinking it's going to come down. The next thing it does is to go up. Once I'm out, I will just relog and you join me again. So the price, when you are second guessing, it hits the roof, and you might think the price is going to go down the way it came up, do zigzag, move back, do zigzag, move back. What the price did was just to go down, bam. So how do we engage this? We're going to also learn that. The third consolidation you can see here is, look at this consolidation. The price actually, went up here, and pretty much it came down. You thought it will continue to do that. It's going to go up again. Then the thing stayed in the middle. You thought, okay, with all this move, it's still going to go up because it did like that here. What did the price do? The price just went down, bam. So when the price got here, so something has changed here. You are second guessing the price that maybe it's going to break down to move. The price now went to now do what you were expecting the price to do here. So the price got to this ceiling and it came back down. So we see different pattern. And we are going to learn on how to engage all these patterns. There are more patterns that you will see with price, but let me just stop the pattern there for now, and let's go back to our chart. So once I'm out, just relog again. Now we are going to study. You see, these are areas of consolidation in the market which you are going to study, and how to deploy everything that we know to read it. So let me just zoom out. Now, zooming out, let me bring my drawing for you to see. They were hidden before, so you can see now that my lines are back. And so what I want to do now is to zoom out for us to see those areas of consolidation, what we can see. Now we said the price came down from here, the price got to this point, and the price went down. This is not much like a consolidation around this area, because the price just more like a pullback, still trending, and here. There is one more thing I need to tell you. If the price is going to move one way, it's a show of strength that you must always look for. Show of strength. See, when the price was moving down, how many blues or greens did you see? At this point, the price just bounced down on 4 hour. This is a show of force and strength. But in the attempt to go up, even to get to this point, see how many days it took. Probably this movement from here. Let's see from here This is March the 9th of March till let's say 19th of March. 10 days. It took 10 days to get here, and it's taking eternity to get up here. From March 19 till now, to get up to this point, it's taking eternity. That tells you something, that whoever is controlling the trade, they are the bears. So, who are the bears? The US dollar is the one that is controlling. So, whatever you are seeing here is just any effort to do anything to scare anybody, and you don't know when they're going to end. And the bears are looking at them. Okay, continue. And a whole lot of things can happen, sort upon injury and instability in the market, and all of that, can create whatever we are seeing. Well, we don't know, but everybody is thinking that it's going to move down. So, from time to time, what do we do? You can say, oh, you want to draw a trend line, probably from here, because this is more, you can't put this part of the wave with this, because this is a sharp rise, not as sharp as this. It's a sharp rise to this point. So, but from here, you can see that it's a gradual descent. So, how do we engage it? This is what we do. We try to do analysis, bring a trend line. You must know how to draw this trend line. You bring a trend line to this level of the price where you had the lowest level of the price. You bring the trend line and to at least this level. And this was what was, anybody could have drawn this and expecting probably the price is going to, make a U-turn. So that's how to draw. And the slope here, it's really different from what you have here. This is another slope. That is why I had to draw this again, to watch if there's going to be a crossing. Once you're going to see a crossing, then you are ready, you are waiting for the price to bounce down. So we draw this trend line from time to time to catch the move as early as possible. Now, if you watch this area, the price got to this point and the highest point, and went past this highest point and got to this area, and for many days price could not make it high or go beyond this. And this is a plateau, this is another plateau, and we were expecting that the price was going to bounce that back. You see, the price came back to this level. This is like a bottom, one bottom and the other bottom. And for anybody, it could mean that when the price make a bottom like this and another bottom like this, you see, this has become a strong resistance. This has become a strong support that the price could not break through this level and this level, which was a strong resistance in the past here at this point and at this point. So at this point and at this point, it was a strong resistance, and the price got here to make it what? A support here and here. And off again, you see another strong resistance here that the price could not break through. So we were waiting that the price again probably should come to this support or bow back at this level of resistance. That was what we were expecting. But what did the price do? The price went above it, got to this point, and also got to this level now. But the level the price is here now, it's a level that we think the price might not be able to go beyond it. Otherwise, something is out of, that's a level. So this is where the level, that's what the week I saw the other time said, the level of this is where the price might not be able to break. And when you see a sign like this, let me try to. Usually, when you see a sign like this, oh goodness. Now, when you can see this wick here. I hope you are still here with me. When you see this particular candle here,
We are here with you, Chief.
it's very
Carry on.
significant. Yeah, it's very significant because they sent a
Over here.
wick to this particular resistance
We're
and
going to
they bounced back,
Doctor.
and
Sorry, Doctor.
these areas of support and resistance, there are clusters of areas of support and resistance here that we know that this particular resistance here, it's very key. It's very key. So the price had moved beyond where my last trade trigger here at this blue level. So I have a trade here triggered already to sell, and just above this black line, which is resistance, is where my stop loss is in case if anything wants to happen, go budget. So now there is a tendency for the price also to nosedive, so we have to know that. But for how long, we are not going to take our TP, even if that happens. We are not going to take our TP and say, oh, we are coming right down here. The best thing is, of course, we can begin to look at this area of resistance, as further in my analysis. I want to show you something else again. What I taught us last week. I taught us this last week. If you can see the screen, the boxes are meant for anybody that cannot even draw a trend line. The boxes are meant for people that cannot. I want you to pay attention to it. If you can snap with your phone these boxes. Now, in a downtrend, this is a downtrend now. The price, actually, you can see my boxes moving from the left of the screen to the right of the screen and falling down. It means that this is a downtrend. So the first box, of course, we draw this box on 4-hour candle. The first box here tells us probably price was rising, and at the point, this was the highest point the price could make, and we look for the low of that price and the highest point to draw the first box. And after a while, another X box formed, which was below the first box, that sends a signal as if the price wants to reverse. So you look at the high and the low of the price. So the low is more than the low here, which means it's like the uptrend wants to cease. So it went down. The second box is not enough for us to say you want to join the trade. Like I told us last week, you have to put your 50 MA, you watch it as across the candle. If the candle closes below 15 minutes, which is the early signal, and below the 30 minutes, which is more like 60% or thereabout assurance that the price wants to change. But at 1 hour, candle closing below it, it's good for you. And not one strategy is what can work for forex. You have to use all strategies, from your technical analysis, from your box drawing, from your indicators and everything. You have to tick all the boxes. But this box is good for anybody to see. So the third box that formed actually went up. So when you see this formation, of course you don't want to join any trade like this, because the trade is in the middle of nowhere. The trade, you had the first one that formed, the second one was okay, let me see and wait for the third one to form. But the third one for me went in between the two. It was sandwiched between the two. Then the next box that formed was actually lower than this X. So having this, it's a good sign that I think I can join this trade. Joining this trade, I don't have all my highs closed. So that is what I can say here with this. So, but you have your eyes open. You can join the trades, check all the boxes and tick them. You join the trade, and you have this, which is more like a confirmation that the trend is now going your way. and the fourth box you can have, okay, so it's actually trending down. There are two things I want you to pick from this box. At the commencement of the reversal here, you wait, and you waited, okay, this one is good enough. The third one, no way, let me wait some more. Okay, this one is good enough. So you have 1, 2, 3 boxes that are falling below. And when you see the second box, you can see the length of the second box. It's longer. When it's longer, it's a show of force. When it's small like this, it's more like a consolidation, which you can't really. And the box here also is bigger than this one, it's longer than this one, so you are very careful. The length of the boxes also means something, that is a show of force to drive the price down. So you look at that. So I can plan to join and do all what I have to do to join the trade here. Then the third box is good for me. So if at the commencement I have 1 confirmation, 2 and 3, and the price is now moving against me, you can see this arrow here. The price decides to go against me. The trend is not formed proper. I've not even moved more than 50 pips, and this happens. At what point do I come out of this trade? The price moving to get to the edge of this box is not time to exit. It will be too early to say you want to exit. Some people can exit, but I think it's like panic, and it will be an early exit because the price is just making it up from here, down from here. So, but a very good place to say, okay, let me exit and wait, will be at the third. If you divide these to 4 portion, so the 75 percentile or 75, the 3/4 up is where you can put, okay, when the price gets here, I think is of no use. Let me just make the little that I've gained, or have a little loss and just get out and wait again. So at that point, the price I'd gotten here is not just good enough. You have to wait. When price is reversing, the price is funny. The price can take 1, 2 boxes up, but a price that is reversing, most of the time we stop in the middle or at the quarter. It won't get to the edge of where it started. By the time it's getting here, it's getting too late for you. It's like you are deaf, you are blind, so to see it. So it's better to get out at the middle of the box here, the first box, because you've just made 1, 2, 3 confirmation, and the price now forced itself back beyond the second box. The first box is gone, the second box is gone, you can see, because at the beginning of the trend, and the third box at the quarter here or the middle. Just get out and wait again. It's not bad to wait again. And if the price, moves below it, good, you can continue. Now, the trend appears to have formed with the fourth one. So it's not at the commencement again. At the commencement, you have 3 boxes to decide. But with the fourth one, it's like the trend looks established and you see movement against you. So it has to be 3 boxes to make a decision. 1, 2, 3 at the entry. 1, 2, 3 when the price is moving. So it gets here, gets to the second box. At the second edge here will be a good way, a good place to plan your early exit. But of course, your late exit, if you still, you are tough a bit, your late exit should be in the middle of here. The 3/4 up already is chopping into your credit. So if I were you, it has climbed the first, it's like it climbed the second. What am I waiting for? Let me just be in the middle here and just exit with minimal loss or little gain. Is good for me. That is what you see when it's trending. At the reversal, this is the point. That was why I put reversal exit at the middle of the first box. That's the reversal exit. And when it's trending proper and you are moving down, you look at the first candle edge, the second candle edge, the middle of the third to it, or the 3/4 up, it's your exit. Now, Assuming we are trending, yeah, in an uptrend now, the price was actually falling, and this was the lowest level of the price, and it bounced back to this level. And the next one, you have the second one, and the price came back in, and the third. So you have 1 and 2 and 3 to confirm that, okay, yes, I'm in this to buy. Now you are buying, and the price moved against you to sell. So you are looking at this edge. Will the price get there? The price got there, and your exit, because the third one, you are looking at your exit around here, for your movement. But for your reversal, like I told you, it has to be at the middle of the first to exit, because you just joined the trade. So here will be a place to exit. If the price gets here, forget about the trade. It's no good. You have to wait for it. Now, but the trend had formed. You are buying, and the fourth box is formed. So you have to look at it. At what point do I come out? The edge of the first box is gone. The edge of the second box is gone. Now, this is the third to it. So you have to come out at the middle of it, coming off at the 3/4 to this point, or a quarter up here. Some of your credit is gone, or your gains is gone. So, but it's still better for you to look at the middle or the quarter up here. So 3 boxes are good to, in about 70-80% of cases, it works. And I believe that anybody can draw this box. So let's go back to Euro USD, AUD USD. So AUD USD, showing you the boxes. So now at this point, had been a point, the price went up, got to this point, and it made it down. It couldn't go beyond that. It got to this point, bounced back to form like a double, some people say a double bottom. When you have a double bottom, usually it tells you the momentum is still going to go up. So the price got here and was now being forced down to create something like the triple bottom. So the triple bottom that you have, okay, the price is going to get to this point again. So we're looking at, okay, at this point, maybe the price is going to make it down. And it appeared as if the price was going to fall, but it was actually doing what? Pulling back. And the news and whatever it is may have forced the price further up. But at this level of the price now, that we see the price is at the level of where we don't expect the price to go beyond. That's where we are currently, where we don't expect the price to go beyond. Now, of course, I was ticking and forming all the boxes, I was drawing all those boxes. This is 4-hour candle. I was drawing those boxes. The first box at this height, I drew it. And you had consolidation. If you drew any box here, it's going to be below. But I waited to see, because the box is not below here, so I wouldn't even want to draw it. The price didn't go below here, so there's no point drawing it. So it was more at the edge of the box here. Now, the next box was this one that formed higher. So we're looking okay. It made it up again. So the next one was here, which also went a bit lower than here. And at this point, it looked as if they were reversing. So see what happened. This box formed. Probably we're already in this trade thinking that it's going to continue to go. The price, the box went down here. So we have 1 and 2 and 3. Probably we wouldn't have counted this because it was just a little lower than this one. But we got here. We're fine. the box formed, and the next thing is another consolidation along this line, not really particularly higher than the box here for quite a while until we add this. So this would have been, at this point, you don't even want to get out, because the price is not even is probably at the middle of this box here. The price is at the middle of this box here. You don't want to get out here, but you have to look at your first box. This point, the price getting to this point of the box at this level of the candle, it's the point to actually exit it, which we didn't do. So, and the price was forced up again. Now let's see what is now happening after all those move. And after all those move, it was a big move. I want you to listen to this. It was a big move. You have how many candles after breaking this edge here? You have 1, 2, 3 candles, almost 4 candles to get here. It only took like 2 candles to force it down to the base. So this candle here and this candle here force the price down. When you see this and the length of this box is a show of force, and is a force signal that will tell us really that this price want to sell. This is the force signal that will tell anybody that this thing wants to sell. It took 1 and 2 to force the price back to this level. It took 1, 2, 3 and consolidation around here. So what happened thereafter? Another struggle. And the next box that formed, just formed in the middle of it, they were not dragging themselves to get up to this level again, which they couldn't do, and all this happening, and they are back at this point. They are back at this point. And when you see things at this point like this, it's much of a struggle. It's a matter of time. When they are ready to force the price down, they are going to go all the way down. So that is what is going to happen. They forced it down on Friday to this level, and usually after forcing it down, they will rest. During the rest, the price usually will try to pull back up. And this is what happens oftentimes in the market. The price will pull back up, thinking that, okay, they are still buying. But it's the show of strength that should first give you a clue of what the price wants to do. They force it down within just 8 hours. What they achieved over like 12 or 16 hours, they force it down within 8 hours, and they struggled around this region. Now, again, when you see things like this, means that, okay, they are equal strength here, forcing the price. So what I want us to be doing really is that I don't want us to be leaving our trades, over the weekend. Once we're in profit, let's get out. Because if we are trading down and we are out, really, because the price was just probably making a U-turn. So if you are out at this point, you're cashing, the price is still going to go up, and you can still plan a new entry once the market opens. So you would have gained something. That was why I said we should just close our NZD card, NZD USD, USD card, as well as which one? USD JPY. And if you had closed that last week, if you did the 4, the least you would have gotten, if you closed when I said you should close, is between $14 to $15. If you had done that, that would be the least. If you're on 0.01 lot size, so that's the least you would have gotten from closing that. And of course, we'll still pick up and join the trade at almost where, if not better, where we entered. So now, if I'm going to draw another thing entirely, I can't draw anything now. No box to be to be drawn, because the height here is almost at par, except I want to just say, okay, maybe it's a little above, the thread is a little above the box, maybe that. So if I want to draw a box, I come to pick my box, click here, pick my rectangle box, and now when you click on the rectangle box, you'll see the line, then you'll see this shade. When you see this shade, you can go and click on it to select color. So this is the color of white, so that I can see whatever is happening within the candle. So I selected that, so you must know how to use that. Come in here to the edge, click, and come down here to the base of the candle. I can drag this in. Okay, so I have another box formed. So this one had not closed, so I can't actually draw anything on it. So I have to wait. So this one is a bit lower. This one is in the middle, and this one is really nothing. So I'm waiting for more boxes to form down before I know, yes, we are good. We're already on this trade, and I felt that there's no point closing it because our account is really drawn into too much of negative, about $20 or thereabouts. If you're on 0.01, hopefully we are going to recover some of it. So if you go on 1 hour, you'll see what the price is doing. So on those boxes, you can see what the price is doing. So a pullback here, and the price is going to probably attempt this particular area again before it bounced back. On 15 minutes, what is it doing? So that is what the price is doing on 15 minutes, after this move, and is going off, is wearing off. That's with AUD USD. So let me quickly go to AUD card. AUD card is pretty much the same with AUD USD. It's pretty much the same. If we go on weekly candle, the same pattern of analysis. Now, that's the weekly candle. So it's bearish, really. It's been selling. Now, what we have against this is the movement against. So you can see again all this candle formation: 1, 2, 3, 4, 5, 6, 7, 8, 9. About almost like 10 weeks, it's been pulling back to buy, and what they achieved within 10 weeks was achieved within 3 weeks. Here, they changed the price here: 1 week, 2 weeks, the 3rd week. That's how they show their show of strength. If they're going to move, they move like that within 3 weeks, and they are trying to recover in 10 weeks. So the momentum is downward. Not until we see this kind of move on our weekly candle upward, they cannot overcome these people. That is how to interpret. But at the same time, if you want to do it, you can draw a trend line below the base and see that the strength of the candle is also burning out. They gather momentum here, and they picked raise here. Even though they picked their raise and moving up, is not as big and huge as this one that had a very long wick to this point. So they are thinning off. And for this candle to have more bodies here, news, COVID, things are not really the way it should, but they have managed to force the price to this point. They have managed to force the price to this level, and I see them also bowing out. And so where I think they cannot get to is, if it is you can see these two candles on a weekly basis, these two candles, and these 2 week candle, 1 week and 1 week, and these are 1 week and 1 week. So if you want to do it, you can draw an horizontal line. Say this is where I give you guys, and at this point you can't move any further. At this point, you can't move any further. At this point, this is at about 9,500. So we might need to change our our stop loss on AUD card to 92,600 because it's at 92,513. So we might need to change it to 92,600 in case of anything. So this line is like a resistance here, like a support more or less in 2 weeks, on 2 weeks here. So we might just need to do that tomorrow. Now, I haven't done that. Like I told you, we expect the momentum to shift downward, but we have to look for what and what will tell us if the momentum is shifting downward. So on the daily candle is buying. What you saw here was what happened. Now, before now, they have been having their upper hand, and these ones were trying to come back until when they showed effort. The bears showed effort that they want to come back here, and so see what happened here, and the way they forced the price with this. So this is daily candle. So you can see the long wick here, forcing the price here is the activity of the bears trying to push back, and at this level also. So let's now go back to the 4-hour candle. Okay, this is the 4-hour candle. This is what happened on Friday. They got to this height. For the first time, the bears forced the price down to this level by almost how many pips? They forced it down by about 108 pips. And the activity around here is a struggle. But I should think from my interpreting this, I should think that the bulls are trying to recover something, probably to exit the market. Because the movement here, look at this particular candle, is massive. Their own recovery candle is not as long as that. This single candle, it's about 83 pips or 84 pips. Let's look at their own recovery candle. Their own recovery candle, this one is about 66. So not as long as this candle. These are 4 signs that people will pick, in the market. And like I told you on Thursday or Friday, I said expect that the price will still push itself up to this zone, and that is what we witnessed. Almost immediately they try to push it up and break this zone. They are more or less at the quarter end. If the price should get to this point, at this edge, I think they might still push the price up a bit. Of course, they will struggle to push it up a bit, getting some people off the market before the bearish move. But that might not happen. I will tell you the reason why it might not happen. See here in the middle, this is like an hammer on the 4-hour candle. It's like an hammer, and also this is like an hammer also here. Had this particular resistance, this blue resistance, it's a major resistance line. So You can see the hammer could not pierce through it, and they are using their hammer to even break it down, to move down. And we want to see, it's going to be interesting in the coming week. And to have a good idea again, so I drew this trend line to see how market behaves around this line, and if they're able to begin to push down. When they are ready, the bears will be ready if they're able to go below this level of price. That is when bears will be ready. So we are going to wait for that on when they push price below here. So we continue to draw candle. Of course, there's no candle to draw here now. For me to box. For me to draw any other box here, the box has to go beyond this particular box before I can draw any box. So you have to know that. So we have 3 boxes indicating that the price is moving down, 1 and 2 and 3. And so far, anything that we have here is in between these 3 boxes. So we can't draw any box. So that also is giving us an information that they are getting weak. If you count how many candles you have within these boxes and the ones that we have, you can count. This is 4 hours, so we can count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles. 10 candles. So now within that zone, in opposition, how many candles do we have? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So we have 12 candles in opposition. So if there is a show of force, I expect that they will have a shorter candle and more movement against them. So it will be interesting to see what is going to happen. So we are going to probably just shift our stop loss to 0.92600 immediately the market opens. I ordinarily would not expect the price to move beyond the edge of this box, but you can't say never in forex. Now if I go on 1 hour, is there anything for me to pick again? Yeah, on 1 hour we can see another hammer. On 1 hour you can see this hammer on 1 hour. Hammer are very good because they are pin bars. The hammers are very good. They have forced the price to this zone with a small body. A little tail here, a longer tail here. The longer tail here tells you that the bears, which are the sellers, are forcing the price down. And it's a sign that they are going to use this hammer to break heads and move down on 1 hour. So there might be a little ascent. They might not be able to cross beyond here. So this is like a zone that they don't want the price to get to again after what they did around this area. Around this area. Yeah, around this. Okay, let me just zoom out. After what they did here, so it's a zone that they don't want the price to get to. Even if you see the first box that they made to move up, and compare that with the force of movement downward, the bears are taking over this market. It's a matter of time that you're going to see that, and so we have to be patient. And this is a good sign on 1 hour that the price is still going to nosedive. Maybe by Tuesday or Wednesday, we will see that. Now, for now, I think I've come to the end of today's teaching, and we are going to continue tomorrow by analyzing the GB pairs. We know how to plan our exit on time and to rejoin the market. Okay, I said something on the up. I said that a pullback is actually our friend, and as you can see here on 4 hour, pullback is actually a friend for those who have been buying this market, and it will give you, when they were going to do this, nobody knew. They just moved down within few hours, then move it down, and they forced back up just to probably cash out and when this happens, it's good for you to know that they want to sell. And when this happens, it's also good for you to have another look at good entry to enter with them from here. So that's why pullbacks are good. And we'll be using this pullback to our advantage in all the trades we'll be taking. So do we have questions? In this group, one person cannot do it all. And working as a team is going to really help us. And that is why I'm taking all the pain to teach us everything that we need to know, which we have to practice. I can give you trade signal, and I can try my best to manage the trade for you. But when you know also, some of us, we have other things that we do. But forming a team, somebody can also check, knowing what to look for, and drop messages on the up that, oh, the box, we are nearing exit time. We are nearing where to really exit the market. And so once we drop that, we are helping each other. So we'll be doing more of that to help each other. And it will make it much easier for us to win more and to minimize our loss. Now, for people that are new to my boxes, I said once you have a box, the first thing you have to do is to use your EMA, this is EMA 50, which is the black one, and see where your EMA is. Now, looking at this EMA here, 50. Now, the price is above here, your EMA 50, that tells you, oh, it's buying. The price crossing it for the first time here speaks volume. This looks maybe like a pullback, if that is what you want to call it, breaking it. But the strength is what you have to always look at. The strength of breaking through on a 4 hour. It's very important. If I zoom out, let's see what had happened. See, this is from where they were making their ascent. And for a long time, this is weekly. This is 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks. For like 5 weeks, price actually was above the EMA 50 until they were now using it as a support. They were burning out their strength. The buyers are burning out. You see, they were touching the edge of it, and price was crossing it. They forced it down, they move it back. These are signs of weaknesses from the bulls. When you see these, when they moved and they forced back, okay, we're going to force you up. They did that for about 5 weeks or thereabout, and they were using it as support, and they broke it. And now, see the way they broke it here with some strength, more than what you saw here. These are signs that you pick on 4 hour candle and your 50 EMA. Now, how do we plan our early entry is what is also very important. So when we zoom like this for our early entry, we want to look at these areas of the boxes. Once the box forms and is dropping, so we want to see look at 30 minutes. Now, looking at that on 30 minutes, this was the first box that formed. And we want to see if any candle closes below it. No candle closed below the EMA here. So nobody could enter anything or plant anything here. So these were the set of candles that closed below it. And because they are not strong enough. They're not strong enough. Again, you don't want to probably say, oh, I want to join. Because we have to consider show of strength is also very important in planning our entry. You look at the box that formed, very small box, got to their height, they forced it down, you have 30 minutes candle below it. You really want to be careful. And at this point, it's enough confirmation that something wants to happen, because they broke it and there are long candles that broke through. This was their retaliation. Compare their retaliation, you will even see it more on 30 minutes than what you saw the other time. So see, the long candles that broke it, and their retaliation was weak. They broke it and got to this edge, and they were trying to force it back, and they slapped them down here again and all of that, and they wobbled and fumbled to this height, and this also is happening. So the candle for me that will show me something wants to happen is this candle here. This particular candle that formed below the EMA. So when you see that forming below the EMA, then the next thing you want to do was to look at 1 hour. Any 1 hour candle below it. So at this point also, 1 hour candle formed just below it, before we got there, but more or less wobbling and fumbling, no show of strength. And where we add strength is at this point here. So once you see 1 hour candle forming below like this and it's strong, I can bet it with anything that at least, don't let me say 100%, because we shouldn't say 100%. I can bet with anything that they are going to sell. Okay? But when we see this, I will always warn us. When you don't know that a move is going to occur and you see a move, don't ever join the trade. You don't know where that trade is going. You have not analyzed it. Don't ever join. Oh, I see move. Let me join the move. Don't ever join any move that you have not analyzed. Let them do their move. They will move, and they can't continue to give boxing to anybody. They want to recoil and relax. Is when they want to relax, then you have time to have studied the move and see, oh, this is what is happening. Then you plan how to enter it. And we saw this move. I had been waiting and I didn't catch it. I said I will have time to catch it. And this was my point to catch the trade. I actually have a trade at this point. Probably a bit at this point. I have a trade at this level of 918 on something. I have a trade here. And our money management also tells us that we don't commit all the funds to all our trade at first. You enter the trade, you see that everything is good. Probably you thought it's good. And when the thing is going against you, just remove your trade. Wait again. Probably will get a good entry and a good signal. That is what we do. We don't commit everything. So see what is happening on 1 hour now. This is what is happening on 1 hour. And they moved up here. The rate at which they move the price down is what we will look at. See their own show of strength. The way they wobbled and fumbled up. See again on 4 hour, bang, 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 bang. They drag it down. See their reply. Somebody is giving you 2 knuckles, you are dead. And you are giving like 20. The man is just dusting it. So that is how we look at it. There are so many angles of interpreting the mood of the market. And when they want to do their own, they are going to share prak, prak, prak. And when they are going to eventually come down, they are going to come down also in this fashion. They are not going to come down gently. They are going to come down in a lightning fashion. So we just hope and keep our finger crossed that they will not make it to eat. But it's not likely that they're going to eat our stop loss, really. It's not likely anymore. Here, when they formed the first box, is small, so we didn't notice the aggression until now. So probably we were too quick to have entered AUD card because of this resistance, and it was a false breakout, but everything will be clear, as the time goes on. So we now have this below it, and they are using this as more or less like the last support that they're going to break. This they're going to break it and continue to fall. That is what we expect from our analysis next week. So I hope we all understood these boxes very well, and how to make use of these boxes, and how to now look for the price, the mid zone. You look for the price. What's the length here to this point? What's the price pip? You calculate, divide into 2, find the midline, and draw your price line. You draw for everyone to look for where you can enter and exit the market. Any other question? Can ask me.
It's Bola here. Just it's about the boxes. Sorry, I don't understand. It might be because I'm new to it. So
Okay.
I don't understand how you're choosing what area to draw the boxes in.
Okay.
Sorry.
Okay, you don't understand how to. Okay.
Well, if there's somewhere I could go and read on it, that's fine.
No,
But
no,
I
no,
just
no. I will. Let me look for. Okay, let me look for a particular currency. Yes. Let me look for this
thank
one.
you.
Okay. This is Euro USD. This is Euro USD. Okay. This is Euro USD. Assuming this is what we have. And what is hidden on the right side of the screen, price has not gotten there. So the price was actually doing what? Was falling. Selling here. Do you understand me?
Yeah.
So the
Yes.
first thing you want to note, what is the first price that is going to move against it and be above it. So when the price will move above them is what you are looking for. So the price is still falling, and the price got to this, and price made a turn to this point. Do you understand? Now a candle now formed. This particular candle touched this level low and this level above. Now I won't take this 10 candle seriously. I won't take it seriously because this candle, the height of the candle is almost at par with this. But the candle I want to take seriously is this candle here. So I will now take this as the first level of high, and in conjunction with this level of low, ask my first box. Is a movement against the red candle. So that's the first box I'm going to draw. So I take my box, click on this box, come to the edge of this, the way I want to draw. Okay, I'm sitting on the 10 candle. My horizontal line is on the second candle that has body. I click to get my box and come to the level. Okay, make sure that the level of that is actually just below that line. Just below that line, I take my first box. That's the way I've assuming this one from this particular candle probably is not formed because we won't see this. So this is the first box that moved against the price. So I want to see if the price, another one is going to go. Now this also had moved. This will be my second box really. This will be my second box really, because it's like it's going higher. It's going higher. These and these will be my second box. So I want to take another box, come up here at that level. So the price is there. Tick and take the 2 to the edge of it. Okay, the edge right there. I take the second box. Now I want to wait again to see where the price is going to get higher than this. So this is not as high, is below it. Then this will be the third one forming. really, this height here. So I might want to take this as the next candle or the next box with these two. I can even take these three together and say, okay, at that level, see the level I take, and that will be the third box. Now these three boxes are the boxes I want to use to say, okay, oh, maybe the price wants to move up and plan my entry. If I want to plan my entry, I may have look for the middle zone of this and say probably the line. I will draw one line here. If this one is like 60 pips difference, I will divide into two and give me 30. I will add 30 pips to whatever the base is giving me. If this base is giving me, like you can see on the screen at the foot, 1.07664, I will add 300 pips to that. I mean 30 pips to that, which is like 0.7964. So I'll come to the middle of where the 0.9674 is. Our piece was a show of force to move up. Here is a show of force to move up, and this happened, boom, and they went. So this will be another candle I want to draw. So another box I want to draw. This is it. So I want to draw this and wait until they're going to retest to join them. So they move up, bam, and they kept going up and up and up. And
sorry, hello sir.
Yep.
Sorry to disturb you.
Okay.
Help me to just kind of minimize. I want to snap this screen.
Minimize as in?
Not minimize, as in make it, make it to be clustered,
Like
pack
this?
it together.
Like this? Is it okay for you
Yeah,
like this?
Reduce more. Okay, now.
Okay, is it okay
Shift.
like
Let me see all the. Yes, yeah, very good.
Okay.
Very good.
Okay.
Hold on. I'm trying to get something and
okay.
I think I'm getting it right.
Okay.
Sorry. One second. Yeah, got it.
Okay.
Thank you.
So now with this move here, it's like they want to buy. This is a strong indication. They have been showing it right from here, their intention to buy. And of course, they will allow the bears that are professional, that are experienced, to cash out and leave the market. So they are trying to fight back to leave the market as early as they could. And they might not be able to come to this point again, but they were able to exit at this point and at this point. This yellow line were the exit point for the sellers. They were able to exit before this move. And after that, they begin to throw long candles. If anybody missed any move here, so by the time you try to draw your box, get down back there. So price didn't make it back down there. Price went up and it didn't make it up down there. So probably one could have used this as other levels of support. Or if you go for 3/4, because that's another thing you can do. If price will not come, you can do for 3/4. Price will definitely pick you up at the 3/4 level up, because the price is moving up. So if you use 3/4 level up, it should be around here. Price will pick us, and we can now enjoy the ride to the point that they are. So along the line now, what we are trying to do, also we are trying to see the way price is behaving. So if you draw your trend line from the edge of, because it's another thing that you have to know how to draw a trend line. Once a candle forms, because you don't know what is going to happen, you want to draw a trend line. So you take a trend line, you come to the base of that trend line, of that candle here. So the line comes up, you take it to the edge of anyone you can pick. Let's say this edge here. Good. So when you pick a trend line here, whenever the price crosses this trend line, it has broken a trend. So you are watching for what is going to happen. So you begin to draw your boxes because this is the upper level. It has broken it, and it's giving you a signal that it wants to sell. So you saw the first box and was strong. The second box was not quite strong. So you have to be wary because this actually broke another level, but not quite strong. You could have just from here to this point, not quite strong, and the third box didn't form. The price made it up again. So you have to wait for the third box to form. So now another formation here, and the price keeps rising. This was a new high, and newer high. So this is where we are now presently. This is where we are now presently. So if I'm going to draw a box, I'm going to take this newer high at a level. Okay, I can come right on top of it. And to the base here to draw another box. So it keeps rising. 1, 2, 3. Keeps rising, and it's still within these. And this candle now is the first candle forming below this trend line. This is the first candle. And this is the trade we are looking at. What is going to happen next week? Is it going to sell? Everybody is lining up for a sell. Why are we lining up for a sell? Already, my entry is at this point. That's where my entry is. So I'm waiting for a reversal, probably to pick me in the middle up here or here. So I'm looking at my entry at this level. But this is the first sign. It's an hammer. I'm looking at that. And it's not only because it's an hammer. There are other things I have to look at. Before going into the box is the first one, and this breaking out of the box, like it happened here also, you have to keep checking. If I zoom out, now zooming out here, I see a pattern here. This particular price level is a resistance. This particular currency is selling. This particular currency is selling, and it's sold to this level, and they reversed it to this point. And this was the highest point they got to. And they forced it back in the middle, and they were doing a zigzag. And the kind of pattern that I showed you on a diagram of a consolidation, you can see this kind of a pattern. From up here, they went back to this point. It was in the middle. They were doing zigzag and zigzag. They didn't get to the edge. They came back down. You know, I showed you something like this pattern, before. Yeah. So they didn't actually, they just came down again. So you have to know how to engage this kind of a trade. So they came down here and they went a bit higher up. This is like a double shoulder, like a shoulder here, the head here, and another shoulder here. So when you see a double shoulder, a head, stopped by this point, and a shoulder, it signifies a reversal. So, and they sold to this point to form a base. And they went up, sliding up. They got to the middle, went back down, as if they would never go up again. So, anybody here might be thinking that maybe a hand has come to the bulls buying, and they have formed a base here. This base is another base that you'll be watching out, that if the bears are able to break this base, then they are going to continue their long sell. So these are patterns you have to look for, and they got here and back down. They were not able to get to this upper zone again. They now moved in between here. These were my boxes that I was drawing, that I showed you. You can see the boxes here, more or less consolidation before this break. And when this break occurred, we were expecting a reversal along this line. where they had a reversal of double shoulder, that the price will never get there and it will reverse. So you never can say never, never ever. But you can see what happened even at the edge of this shoulder, they broke it. News, whatever, caused the break. And now they are this point. That was the highest point they were forced back. So if I were you, I want to take my entries very serious around this point and probably do a 20 pips above it as my stop loss. And that will confirm how strong this level of resistance is. So I will take that seriously. So I'm also patching here already. I'm patched here. I'm going to give that signal on Sunday. I'm patched here already, waiting for a reversal. And this candle that you can see, this small candle, it's an armor signifying that the reversal is going to occur along this very blue line, which is a resistance. So this is where the price was forced back. So these are the things I have to look, hard, since they struggled and they did all this unexpected thing. And if they're going to fall, this thing is going to fall like mad, because we know the US has the strength to sell the euro. The euro, so that's the line of trend. You can see the way they fell. Like I told you, I said, is a show of strength. See, from this height, bam, they came down within a short, less than 2 weeks. Within 2 weeks, they did this, bam, and in trying to go back, they struggled, and we are still there. And that is what price does, and it will continue to do that. After a fall of 2 weeks, you are probably going to experience the same thing with AUD card, when it's going to fall like for 2 weeks, and after 2 weeks they're going to begin to do they can fumble for another 3 months. Like this thing, it's almost a similar pattern. That's what they do. So they are going to probably do the same thing to wumble and fumble, and you are trying to pick little in the middle, trying to decode the pattern they are forming and all of that, and before another great move. So this is where they are now. So honestly, between me and you, I think about 95% sure that the price is going to crash heavily from here next week. So we can see that reversal. So I'm already patched there. Now, what other things can we see to confirm apart from that thing? I had to clone my line. I cloned this line, this to draw a trend line, and I had to clone it above here. So this is the reversal. So is there any other thing we can see from that reversal? Let's look at our 1 hour candle. So you can see they broke it down and they are trying to retest this area. So this candle is good for us, and you'll be seeing negatives in your account if you are there. They will always retest, and it's good for us. So when they retest, they come to in between this zone for anybody to still enter. They are going to break this particular level and come right around this area, if not at this edge. They are not likely to come to this edge again. I don't see that happening, but it could happen. But definitely it's going to be below this yellow or lemon line that we are going to plan our entry between the blue and yellow. If we want to be safe, we are looking at something around this area, 353, 11353, 1135, 322. So we enter and enjoy the ride downward. And so we're going to see how that works out. So your box, you use your 4 hour candle to draw your new level of high of boxes, and you wait. Further questions? I think this box of the thing is getting clearer.
It's getting better.
Huh?
It's getting better.
Okay. Okay. If you don't have any other questions, we'll wait till tomorrow to analyze pounds and yens. We've been able to go through our AUD card, our AUD USD, and our Euro USD somehow now. So we're going to look at the pattern between pounds and USD, pounds and yen, and those two. They are very important. All right. So good night, and God bless you.
Thank you.
I'm done. So my video, stop the mo record TP yan keshele o. Mo record
the active presenter. What should I save it as?